The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN Wednesday morning, just after 9 a.m. Eastern Time. We got markets this morning, pretty much mixed, we'll call it. You got the S&P, NASDAQ, and Dow slightly in the red. Russell barely in the positive by less than 1 point, though. We're just chopping around where we are. You look at the S&P, right? We make a high, new high yesterday. S&P, we closed at a record high, and we've just been chopping around, though, for almost a week, right? You make that high of 57.97. Following the Fed decision last Wednesday, the markets really accelerate last Thursday, and we've just been chopping around at this price level, basically. A little bit of volatility, a little bit of positive prices, but nonetheless, we'll take this Fibonacci chart off here for a little bit of clarity. Yeah, nonetheless, you can see there is last Thursday, and here's a little bit of a chop, and we reach record highs in the S&P last night. On the futures, you close at 57.92, and we're off by just 2 points right now. Pretty remarkable. You take a look at this chart on a weekly basis, positive prices across the board. You're talking about record territory in the S&Ps yet again. NASDAQ 100. 20,214 yesterday. Quite a little volatility. We go down, we go up. We're negative by 24 points right now. You get the Dow off by 15, 42,582. And as I mentioned, the Russell, basically we'll call it flat. Now it is intriguing, as I talked about, the S&P, that's why I mentioned it. Yeah, just chopping around, consolidating since we made these highs last Thursday at 57.97. And remember, we got a record close in the S&P. We got up to 57.97 last Thursday, but you trailed off a bit into the afternoon. So we got a record close yesterday, but you do take a look at the Russell, and we're a solid 2% off of those highs that we made at the beginning of last Thursday. We're basically at the lows almost of you were last Thursday, but yeah, quite a little pullback. Bitcoin down $800. We're trading at 63,660. You jump over to crude, down $1. Look at this volatility, right? We just traded with a 69 handle in crude. We're trading at 70.48 right now. We were as high as 72.40 yesterday. You take a look at crude. What's intriguing is crude. Take this one off there as well. Yeah, we're just chopping around between 70 and 72. We've been up at that price level for about 9 or 10 days right now. And what is always interesting is we're going to talk to our man Teddy Kegstad at 40 past the hour. We talk some commodities. We talk some currencies. Looking forward to having him on. And yeah, look at that dollar, man. Quite the day yesterday. You had gold surging to highs, a dollar having to do with a lot of that. Yesterday, you had the dollar in the overnight session at 101. You make it down to 100.40, and we are lower yet again today at 128. We might get a 99 handle by the end of the program. We'll see how we trade. You jump over to that gold contract right now. Quite a day yesterday on gold. You make a new overnight high, 26.94. We're pushing those highs right now. We have a weak dollar. We got the gold contract at 26.88, and we might see 2,700 before the show is over. Silver. Quite the acceleration yesterday as well on that weak dollar. Silver trades from almost 31 up to 32.50. We're trading back 27 cents right now at 32.50. And we jump to notes and bonds. And what do we got going on? A little bit of lower price, higher yield, which is so intriguing, right? That seems to be where we're going right now. You got the 10-year above 3.75%. We'll call it 3.76 is where we're rounding to. 3.76. The yield on the 10-year, and we've seen a little bit of a recoil from where we were with the Fed. So a little bit of lower price, actually higher yield after the Fed. Now that's the 10-year. What is intriguing is you take a look at the 2-year, okay, which is ZT on the futures. And just for a moment, here, I'll put this on a 20-day hourly, okay? And what you can see on the 2-year is there's been no pullback to higher yield. You've seen the pullback on a longer duration to higher yield, right? There's your 10-year, okay? We have the Fed meeting was on the 18th. So there's your Fed volatility. And on the 10-year, you can see that we've pulled back a little bit in price, a little higher yield. But the 2-year's done nothing like that. And the reason why, folks, is because the cuts are coming. That's what the market's saying, right? There's the 18th. Okay, so on a shorter term basis, what you've actually seen is that you've seen yields go down on a 2-year because the pace that the market is anticipating the Fed's going to be on the next 2 years is pretty rapid. But what is intriguing is since that meeting, look at the pullback you've had on the longer duration, right? You got higher yields on the longer duration. You've had a pullback in price on the 30-year. Look at that pullback, right? On the 10-year, a little bit, but not even that much, right? No, that's the 2-year. Yeah, on the 10-year, you got to pull back, but on the 2-year, you do not. So longer duration, we're going a little bit higher right now. Maybe that's an indication, higher for longer. But on the shorter end of the curve, the market's saying the Fed's going to cut, and they're going to bring it, and that's what we have priced in right now into this market. All right, we check back on that dollar right now. Yeah, 129. And you got the gold contract with 26.87. Remarkable. All right, we jump around to some of the Magnificent Seven to kick things off. You got Apple shares. We're going to trade a little bit lower by about $2 to $2.25 on the open for Apple shares. We'll put this back to a 5-minute chart. There you see a little bit of a dip lower in the pre-market. You jump over to Microsoft shares right now. Trading a little bit higher, actually. You jump over to Google shares. They're trading flat. And let's talk about a little bit of yields to kick things off. So mortgage rates. I found it interesting how they phrased the verbiage of this article. So this out early this morning from Bloomberg talking about mortgage rates fall again, triggering a big wave of refinancing. Well, you read that headline, right? You say, oh man, mortgage rates are tanking and everyone's refinancing. Well, they've pulled back, but the article, the headline, a headline is written for people to find intrigue and read the article, right? I don't think the headline does this one justice because mortgage rates fall again. Well, they fell 2 basis points, folks, to 6.13 from 6.15. Yes, the cumulative effect, okay, of the lower interest rates we're seeing are driving more refinancing. You have the index of refinancing applications spiking higher, okay? Reaches a more than 2-year high. The only thing I will say is, and I say it all the time, percentages on small numbers can be deceiving, okay? Reaching a 2-year high for refinances right now is not that special because the refinance market for the last 2 years has been abysmal for obvious reasons, right? We're sitting right now at 6.13%. The contract rate on a 30-year fixed mortgage is down just 2 basis points, but it is the 8th straight weekly drop, the longest stretch of declines since 2018 to 2019. And the reason why I went through all these curves, right, is because you might not see that pullback as dramatic as you may think, because when we went into that Fed decision, right, the 30-year, now, mortgages are based on the 10-year, but look at the longer duration. The 30-year has actually seen yields rise, okay? The 10-year has actually seen yields rise over the last week. The 2-year has not. The 2-year, we're just chopping around, okay, at where we were. But you've actually seen real yields rise on the longer duration. Okay, but nonetheless, you got refinancing speeding up, of course. And yeah, the average contract rate on a 15-year mortgage and the 5-year adjustable ticked up last week. Ticked up. There's the disclaimer. We'll finish this conversation up. We got a lot to talk about, folks. We'll come back. We'll take a look at some equities. You got Micron with their earnings after the bell. Stay tuned. Be right back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC. Welcome back, folks. We got the S&Ps negative by just 1 point right now, inching towards all-time highs yet again. NASDAQ 100 barely in the red. The Russell basically flat right now. Bitcoin down about $900. And, yeah, we got to keep our eye on that dollar, man. 100.30 right now for the dollar, just off of the lows. But that driving some of the commodity action right now. You got the gold contract. Well, I'll get there. Pushing all-time highs at $26.88, up by another $11 right now. Yeah, no matter where you look in this gold market, man, we are on fire, to put it lightly. And we jump over to the crude contract before we jump away. And you got crude trading at $70.58 right now. All right, as I mentioned, some equities. You got Micron. Take a look at Micron. Micron with their numbers after the bell. So this chart, you talk about a pullback, right? You accelerate from $48 at the end of 2022 up to a high of $157. We've pulled back to $94. And if you want to see what type of volatility, you don't have to look that hard, all right? If you want exposure through Friday, you're looking at $8.50 in either direction. Okay, that's about an 9% move. Yeah, 9% move for this equity in either direction, priced into the earnings coming on Friday. And you're looking at about $7.90. Thinkorswim is calculating that has to do with earnings. So you're looking at about an $8 move in either direction on their numbers. They'll be out after the bell. And yeah, you can expect a little volatility when this thing's driven from 157 coming into their last earnings, right? And boy, what a difference 90 days will make, driving from 157 to 94. You jump over to some of the other players. We'll put it back on a 15-minute. You got Qualcomm shares flat this morning. We take a look at Intel. They've been in the press lately, of course, for various reasons. You're trading at $22.80 for Intel. You jump over to the poster boy, NVIDIA. There you go. Quite an acceleration yesterday, and you're pushing it yet again. NVIDIA trading at $122 this morning. up from 121 of the close almost yesterday. And yeah, just above the intraday highs even for NVIDIA yesterday. You jump over to Google, flat right now, and you jump over to Microsoft, they are flat as well. Apple with a little bit of a pullback, right? Not sure what's going on with Apple, but let's talk a little bit of Google and Microsoft. Yeah. So, we got a couple things to talk about here. Google filing an EU antitrust complaint accusing Microsoft of stifling cloud competition. It is pretty amusing when the monopolistic companies controlling the world are going at each other saying, you're the monopoly. No, you're the monopoly stifling competition. They're the cloud players, and Google is saying that Microsoft is playing unfair. They use unfair licensing contracts in its Azure cloud computing business to stifle competition. In its complaint, Google, which ranks third globally in cloud computing, okay, behind AWS and Azure, said Microsoft makes it harder for customers to move their workloads to competitors' clouds. Probably true. Just guessing, right? That's the business that they're in. It comes after a slew of cloud companies in July agreed a settlement with Microsoft, which would see the firm make changes to address competition concerns. Okay? So nonetheless, you're going to see this play out. It's going to be a battle, man. It's never going to stop. Yeah, so European businesses, public sector organizations have been forced to pay $1.1 billion a year in licensing penalties due to restrictions on customers' ability to switch from one cloud provider to another, Google said. Yeah. Licensing penalties, $1.1 billion. You're going to see this one play out, man, and it's going to keep going. Google said that Microsoft undermined competition in cloud and referred to findings in the UK Competition and Markets Authority study, which determined Microsoft acquired over 60 to 70% of all new British businesses in 2001 and 2022. Did you read that one? Yeah. Microsoft acquired basically 2 out of 3 all new British businesses. Man, Google also suggested that Microsoft cloud practices have potentially made businesses more prone to security issues. Well, you know, I'm sure they're going to bring up CrowdStrike there, right? Yeah, and they disagreed with that settlement that many made with Microsoft. Amazon Web Services and Alibaba also chose not to become part of that settlement. So you're going to see this play out because by not being part of that settlement, right, following the July settlement made with Microsoft and a number of organizations, the big players were not part of that. Yeah. Now, Microsoft has denied its cloud practices harm competition. Yeah, you have to chuckle a little bit, right? Firmly believes that the cloud services market is functioning well. Just off the top of my head, right, the one thing that is remarkable is you say, man, that's tough. They're competing. Folks, the big 3 players out there are Amazon, Microsoft, and Google. There's probably some healthy competition across that landscape. Are they being anti-competitive in their own right? Yes. But anyway, that's where the nuance comes into things, and we'll see where they go. But nonetheless, those stocks basically flat right now. All right, we jump to Southwest. Yeah, they're going to cut some of the action in Atlanta, their hub. Southwest Airlines to cut service and staffing in Atlanta to slash costs. It's going to cut more than 300 pilot and flight attendant positions. Southwest is not laying the crews off, but they will likely have to bid to work from other cities. Yeah, Atlanta, always a big hub. Southwest told staff it is not closing its crew base in Atlanta, okay? It's reducing staffing by as many as 200 flight attendants and 140 pilots for the April 2025 bid month. Nonetheless, jump over to Southwest. Put this on a little bit of a longer-term chart. 29.75 off the lows of earlier this year, just made in August of 23.58. And this morning, you're going to basically open flat. We take a look at some of the other airlines. These airlines, man. American, trading at $11. Delta, a little bit of a different story. Looks to be one of the stronger ones out there at 47.80, still off the highs of 53.86 earlier this year. And then JetBlue, $6. Off the low of 342. But that is quite a chart of JetBlue. $6. Chopping around where you were basically during the financial crisis of the years 2008 through 2012. And yeah, they got some problems with JetBlue, to put it lightly. You jump around to some of the banks this morning as we kick things off. You got JP Morgan. Put it back to a daily. Yeah, we'll put it back to a 5-minute. See the premium. We're up above 212 for JP Morgan. You jump over to Bank of America. We're a little bit lower to $39 for Bank of America. Wells Fargo morning this morning, trading at $54. We keep our eye on that dollar. Trading at 131, testing the overnight lows. We check in on gold, pushing 26.88, and you got the S&Ps down 1 point, trading at 57.91. We're 6 points away from all-time highs in the futures. We're right where we closed on the market last night, which was a record close, and we're going to be coming back, folks. We got a lot to talk about. We'll take a look at some more equities, and don't forget, we got our man Teddy Kegstad coming up at 40 past the hour. Always an interesting conversation. We'll be right back for the opening bell, folks.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry August 9th and 23rd for more live trading action. For this month only, use code LarryAug24 at checkout to save $50 off your first month as a subscriber to Live Trading Fridays for his live trading sessions, where you'll sit right beside him as he trades the market live. For this month only, enter code LarryAug24 and save $50 off your first month. For all the information and to reserve your spot today, visit the front page of TFNN.com.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Kegstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Kegstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got stocks open. You got an S&P actually opens in the green at 57.92. You get the Dow climbing, now positive by 45 points. You get the NASDAQ negative by 17 right now. Russell barely in the negative as well. Bitcoin falling a little bit, down almost $1,000. We almost hit 65,000 yesterday. Crude, gotta love those crude prices, chopping around $70.60. Gold pushing right near all-time highs at 26.87 right now. We keep our eye on notes and bonds. And you get the 10-year right now, negative by 5 ticks. And yeah, that's pushing the yield on the 10-year to almost 3.77 right now. 3.77, the yield on that 10-year. You jump over the VIX as this market goes one way, positive territory. VIX actually elevated this morning as we got a positive market, though. S&P's up by 4 and NASDAQ barely in the red. We get the VIX elevated by 21 pennies at 1560. It is intriguing how we've kind of had the slow melt to 1560, especially when you consider how low we were for such a period of time, right? You back things up to July. You back things up. I mean, look at this chart. We are elevated levels, right? I'm going to put this line on this chart right now at about where we are right now, which is 1560, okay? And as you can see, this is a chart that goes back a year, folks. Many times the VIX is below this level in the last year, okay? There's something going on in this market that, yes, we're making record territory across the board, but the VIX is not quite comfortable going down to the levels of 14, 15, 13. I mean, what are we hitting here? 12, right? Many times, 12, 13, right? Back here in November of last year, 12s, 13s across the board. We're at 1560. Not to say that there's worry, but pay attention when you got a little bit more elevated premium than we've had for justifiable reasons, right? The Fed is cutting by 50 basis points. And we will see if they're late to the party or they're ahead of the curve and where that lag may go. All right, what else we got going on in this market? Well, let's see where we're going to go to. Yeah, Visa's a different one. We didn't talk about Visa yesterday. I was looking at Visa last night. V is their symbol. Yeah, you talk about a pullback, man. We'll put this on a 15-minute. So the news hits Monday night. They accelerate yesterday, boy, from 290 to 272.50. And yeah, the Department of Justice sued the world's biggest payment network and accused it of propping up an illegal debit network monopoly that affects the price of nearly everything. We allege that Visa has unlawfully amassed the power to extract fees that far exceeded what it could charge in a competitive market. Attorney General Merrick Garland said in the DOJ release, they accused the company of imposing exclusionary agreements on partners and hurting innovation at upstart firms. Probably makes sense. Just shooting from the hip, right? Nothing matters in terms of the fundamental knowledge of that, but I think we're all kind of aware that to use your debit card, what are you using? You're using a Visa debit card. You use it anywhere else, you're paying fees. Some of those banking fees, pretty exorbitant, to put it lightly. All right. And then, yeah, how about last night with the FTX saga playing out? Caroline Ellison, she's doing 2 years, and she's got to pay $11 billion. Right? You talk about some numbers, man. So she agreed to this plea deal back in December of 2022, right after that cryptocurrency exchange spiraled. And the judge said, basically, this case is too big for a literal get-out-of-jail-free card. Can't agree to it. Her cooperation. And here we go. I've seen a lot of cooperators over the years. I've never seen one quite like Miss Ellison. And yeah, of course, she profoundly regrets, as her lawyer says. But hey, you know what? Good for her in a certain essence. That she's going to be out in 2 years. She's going to have a life. Bankman-Fried, he's doing 25, and that's probably where things deserve to be in terms of who was in charge, who was in the wrong, etc. Doesn't mean she's guilt-free, of course. But yeah, nonetheless, 2 years is 2 years, man. Sitting in a box after pleading guilty, turn on everyone. But yeah, she has her own faults as well. 2 years. $11 billion, right? That's the one that hit me. Pretty remarkable. All right, what else we got pulled up here? We talked about Southwest. We've talked about EU. Let's talk a little bit of China. We talked China yesterday, and they're coming with it yet again. China cuts their one-year policy rate by the most ever in a stimulus drive. People's Bank of China lowers the rate of medium-term loan facility to 2% from 2.3%. Okay, it's a prelude to more easing measures to lift the economy, is how Bloomberg puts it. So People's Bank of China, they cut the medium-term lending rate to 2 from 2.3. The 30 basis point cut was the biggest since the bank began using the monetary tool to guide market interest rates almost a decade ago in 2016. And yeah, that's following the big action they had yesterday. The cut is part of the package. We talked about the package yesterday, right? What do they have? Something like $100 billion plus of liquidity for the markets. They cut the reserve requirement ratio in there. They did a bunch of stuff. But nonetheless, they're cutting that as well. Looking ahead, we see room for the People's Bank of China to do more on the rates front than they've signaled so far. There's a chance the central bank could trim the 7-day reverse repo rate by a further 10 basis points. They already trimmed that a bit. And we check out some of the China stocks this morning. You jump over to Pinduoduo. You're basically flat because we've already had the pop, right? The pop happened here from Monday to Tuesday. You trade up from 102 to 115, and you pull back. You're chopping. You're at 111 for Pinduoduo, excuse me. Alibaba, always an interesting one. Quite the volatility recently. You're up to 98. You're back to 94. And as I mentioned earlier, Alibaba, back to when this thing started trading. September of 2014. Quite a run it has been. All right, we check in on some of our big stocks. You got Apple shares. Slightly in the red this morning, down by about 0.8%, down $1.75 at 225. Check in on Microsoft shares. They're up by 0.5% right now. Amazon down 0.2%. Little volatility from them yesterday, right? From 195 to 190. You close it out at almost 194. You're down 50 pennies right now, almost at 193.54. We jump over to Meta, up by 0.5 percentage point to 566. Tesla gets a little bit of a pop at the open, up by 0.5%. Nvidia, it's just not stopping, man. Check it out, up by 1.75%. Now, Nvidia, how many shares they got out there? Yeah. You're talking about a company with 25 billion shares outstanding. That's not what you do. 25 billion shares outstanding, and you're up 225 today. So to put this in context, yesterday Nvidia was trading at 115 and change. Today you're at 123 and change. That's $8. That is $200 billion in market cap Nvidia has added just in the last 24 hours. That's why when I say, oh, China's adding $100 billion to add in liquidity for their entire stock market, you look at the type of move some of these equities have, folks, okay? Nvidia just gained $200 billion in market cap from where it was trading 24 hours ago. It could give it back just as quickly. $100 billion isn't what it used to be. That's what I said yesterday. I like that line. I'm going to stick with that line. It's not what it used to be, especially when you're talking about trying to prop up a stock market that has some problems. But boy, Nvidia, they are on fire, man. And the news yesterday is that Jensen Huang, he might be done selling. I guess he's hit the upper limit of his selling plan, so it looks like he's done selling for right now. It doesn't mean he can't put a new plan in place nonetheless. All right, folks, stay tuned. We got the S&Ps positive, NASDAQ 100 positive. We got the dollar trading lower, and we're going to come back and talk some currencies with our man Teddy Kegstad from the Tiger Forex Report. Don't go away, folks. We'll be right back with Teddy.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got markets rolling over a bit. Just put it on a 1-minute chart, and you can see the spike up to 57.98. That is a record on the futures, and we roll over a bit. We're trading at 57.88. All the markets slightly in the red right now, but we're going to talk a little bit of currencies. We're going to talk a little bit of commodities, and we do every Wednesday at 40 past the hour, folks. We're going to talk to our man, Teddy Kegstat. You can check out Teddy's outstanding newsletter right under the newsletter tab, folks, the Tiger Forex Report. He's got new issues out every week. It's only $97. It comes with a 30-day money-back guarantee. And don't forget, under the services tab, right on TFNN, he's got a couple of great webinars out there as well. Capitalizing on time with calendar stock option spreads and Japanese candlestick pattern stock and option strategies with our man, Teddy Kegstat. Teddy, good morning.
Good morning, Tommy.
Boy, so we talked to you last Wednesday, and we've had a few things going on in this market since then. Where do you want to kick things off, Teddy?
You know where I like to kick things off is from a conversation I had on Sunday while I was watching the Bears lose.
Oof.
Which the Bears have nothing to do with anything. So I ran into an old friend, and I ran into an old friend, and he said, obviously there was the Fed rate cut last week. And he said, what do you think's going to happen now with the markets? As far as, he's like, not in the next couple weeks, but over the next 6 to, 8 months or so. And I'm like, if you want probably a sure pick, I'm like, buy gold and buy bonds. I told him, for the last couple of years, I said already, been telling people 3-4 years ago, get out of your bonds. They're going to start raising rates eventually. And, now we know that the cycle is done. And also we had the Fed, one of the Fed people come out saying that, pretty much it's likely that they're going to have multiple rate cuts over the next 6 to 8 months and also in half-point increments, So with that kind of aggressive talk out of the Fed, unless the economic numbers start swinging back the way they were, I think that you have to ride those two trades. Gold's is going to shore up, bonds are going to shore up, So I think that those are kind of a given trend play, So that's a good deal, as far as we haven't had a trending market for the interest rates in a while. And now we have really some clarity that the Fed's on a mission to start cutting rates for at least 6 to 8 months. So I think those are two markets that you have to pay attention to, that fundamental. As long as it stays in that speak, if you will, that trend is probably going to be intact for at least 6 months, I would say.
Yeah, we got a lot of gold bugs that love to hear that, Teddy. And it makes sense. I was jumping through the dollar, of course, jumping through the gold contract. When you're talking about it, man, yields, of course, pulling back, to put it lightly. And you talked about the next 6 or 9 months. So what I've been talking about in the last week, Teddy, it is remarkable how many cuts. And, the Fed is responsible for this, as in they're putting out, hey, it's time to cut. we're overly restrictive, et cetera. The risks, some of the verbiage out there, depending on who you ask on the Fed, but Chairman Powell, the risks are now more weighted to the economy versus price stability, that kind of debate that they're having. But they're talking about, you pull up like the Fed Watch tool, just some gauges of what the market is pricing in over the next 6 or 9 months. And, you go out to June of next year, and you're talking about almost 2 full percentage points is what the market is pricing in over the next 9 months, which they only have like 6 meetings or something like that, 7 meetings, which means they're basically going to have to go 50-50 and then 25 for every meeting. So, what do you think? And you kind of laid it out already, but do you see that maybe changing? Do you see, and I know this is going to take some time because I love what you said right now, we're on the path right now and probably won't be a change for some time, but it is interesting that when we get, 9 months is not that far out in the future for the market to be expecting 2 full percentage points of cuts. Are you looking for any differences there? Are you expecting maybe that's where the Fed goes? Are you going to wait for the data? How do you think about that, where just so many cuts priced in right now at a time when S&P just closed at a record high, across the board? Things are pretty good for 2 full percentage points of cuts over the next 9 months or so.
Well, I think it's being done not before where they were raising rates and blah, blah, blah for whatever reason they were doing. And now we know that the cutting is supposedly because they want to, inflation is slowing and whatever. My take is that's all nonsense. The real reason the Fed is going to be so aggressive, and we talked about this already like 6-7 months ago about how 2 years ago, before they started cutting rates, when rates were really, really low, the banks especially, because they're such geniuses when it comes to trading, refinance all kind of liabilities with short-term interest rates instead of long-term, where they could have locked in for 30 years. Sure. So did a lot of municipalities, and so did the government. Yeah. So and what happened is now the interest cost alone, we know, for the government has gone up. Okay. Oof, but here's the biggest problem: the banks have to refinance all these short-term liabilities. And rates in the short term and the long term are how much higher, even with this 0.5 point cut? Okay. Yeah. So in order to bail out the banks as a preemptive move, they're going to be very aggressive with cutting rates. That's the only thing that makes sense for this, because we talked about at the beginning of the year, that was part of our forecast for the year, was how much the government alone had to refinance. And the biggest part of that, when it's coming due? Now. So they just, right now, because of any bond issuance they're going to do, think about how much money they're going to save and make off of this move, okay? Yeah. So, and especially with the way our government has been blowing money, especially on, there's one sector, we got all these new people coming into our country, all these, who's paying for it? The bond market and the taxpayer. That's who's paying for it. They have to fund it. How are they going to fund it? They're going to devalue the dollar, which is synthetically being done by an aggressive rate cutting streak, and then there'll be quantitative easing to float it up, and then have more cash to spend on that. And hopefully they'll go to their banking geniuses and say, okay, would you now refinance on a 30-year structure? Because they can't stay at zero forever. It's just, that's really the situation I think we're in. We had the forecast, like I said at the beginning of the year, for what was going to happen, and I think it's time to pay the piper, and this is the only way that they can do it, and that's why I'm really solid on these trend things. If you were to go by the economic fundamentals, they should have done a 1/4 point, because we still don't know for sure how slow inflation is accelerating, because it's still accelerating. So, and I think these are the things that really impact our trend.
What I found so interesting is why they decided to go 50 without going 25 in the meeting before, all right? As in, that 6 weeks period was somehow a determining factor where they didn't cut rates prior, but now they have to go 50. And Chairman Powell, he talked about a couple jobs reports in there. There's data, of course there is, but I agree with you to a certain degree. It is remarkable that they come quickly with 50, and then and now, boy, the market's like, they're going to bring it, man. I always check out your Tiger Forex report on Mondays. I love how you have so many, whether it's the upper correction bound, you have these critical areas, right? Breakout levels, upside targets, downside targets, etc. When you're looking at Now, I'm going to ask you about gold, but it ties into the dollar, of course. So maybe we could just start, you know what, we're going to come into a break. Can you hang with us, Teddy? And we'll talk just maybe about, I wanted to ask you, you know, if you're looking at the dollar, we'll tease it, folks, what levels maybe? Because we're at kind of that 100 level right now. Gold's at all-time highs. Maybe we can talk about some levels. When we get back, we'll talk some crude. All right, folks, we're going to talk gold, dollar, and crude with our man Teddy. We'll be right back.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. Tommy O'Brien. We're chatting with our man Teddy Kegstad. We got the S&P's positive by 1 right now. And so, Teddy, you know, I have your issue up here that you put out for subscribers on Monday. And just a quick glimpse, folks. I love how you put, you know, critical areas, man. Just, you know, definitive areas in your opinion here. You know, for the DXY, you have critical breakout areas, you have targets, of course, but if you're making that case, and I think a lot of people agree with you, myself included, in terms of the trends, my next question goes, okay, where are we possibly going, you know, on these levels? And for instance, the dollar sitting at 131, how do you look at that on a 6-9 month basis even, or something like that? Are there levels? I know you have levels around 100 maybe on the downside in there in your newsletter, but where, as you know, traders out there, where are you looking in that dollar? Critical area, 100 for sure.
Well, you know, it's interesting is right now we're floating just above the low that we set back in, July of last year. That's
I got
a big
it up
low.
right on the chart as you. Yep, right there. Totally.
If once we take that out, I basically gotta say look out below, And one of the things if I'm correct in those trends, now is this gonna happen over the next couple of days? Most likely, we're not gonna have that. big of a hammer.
No, I'm with you. Right. Yeah.
So, and I would say you have to be in a sell rally forecast now when it comes to the dollar. So the dollar strength is going to wane as long as we're going to have this Fed pressure, and if that is the case, then you're going to see, I would think, you're going to see gold definitely continue to rally. I think you could see a correction in gold probably if there was a profit-taking slide. Let's say somehow the dollar gets a big binge rally. 23.25 would be probably the low area you would see in gold.
Okay.
I think if it gets below 24.50, that's when you have a shot at hitting that lower target. 24.50 is probably going to be your real corrective baseline for gold. Now, where it's at right now, you're trading between 26.28 and 26.83 right now. That's a key rally target area where you should have a pocket of resistance and see a little bit of a pullback, because right now we're testing these extremes, but are we at the bottom of a range or at top of the range? That's the big question. And if we get above it, well, then gold can go to 2,800. Bonds are going to skyrocket. 10-year will as well. And you may see crude have a tough time rallying because of the cost of carry.
Teddy, I love it. So much great information, man. Have a great week. We'll talk to you next Wednesday, man.
You too.